What's up, everyone? My name is Ale, and welcome back to my world of stocks. Now, as you know, I recently made a video about my overall stock market portfolio. And if you haven't seen the video, I'll have it linked for you down in the description. But I was overwhelmed by how many comments we received on that video. And a lot of them were extremely nice and supportive. Really means a lot to me. Those are the type of comments that keep me going on YouTube. So thank you, it means a lot. But there was also a lot of very reasonable questions and some valid concerns about my strategies surrounding those investments. So in today's video, I want to address as many of those comments as we can get to, and we'll separate this into two parts. So the first part will be addressing the comment or the question or concern that I received the most, and that is that my stock portfolio is way too tech heavy. And because so many people asked about that, we'll spend a little extra time on that topic. And then we'll shift over to a rapid fire where I will try to address as many different comments as I can get to and just give quick little responses to each of them. Now, for reference, I'll have the pie chart of my portfolio right up here. It's the same one from the last video, and you can use it for reference. Okay, so here's just a few of the comments that I received about my portfolio being way too tech heavy. I'm surprised you invest that much in the tech sector. I think you are way overweight in tech and telecom. Way tech heavy, diversify, diversify, diversify. Lots of tech stocks. I like swing trading them but not holding long term. Diversify your portfolio, LMAO. So much tech, LOL, yeah, too much tech. Okay, so here's my response. Now, in that video, I fully acknowledge that my portfolio is extremely tech heavy. Nobody is denying that. I am fully aware that it is very tech heavy. One thing that I forgot to mention in that video that I probably should have is that I am researching other companies that would diversify my portfolio. I just feel like I haven't done enough research yet to put my money into them as long-term investments. But just to give you a quick little taste, one company that I'm interested in is PepsiCo. It's a great dividend play. All of these are great dividend plays. You might be noticing that I'm very interested in investing in good dividend stocks for the long term. But PepsiCo is a consumer staples company. You're probably aware of them. They make Pepsi and things like that. Another company is NextEra Energy. So it's a renewable energies company. And then another company is AbbVie, which is a pharmaceutical company. I just feel like I haven't done enough research to invest in them yet, but those would all diversify my portfolio. Those are completely different sectors than just technologies. Now, another part to this is that I am a big believer in diversifying your portfolio because it can help act as a sort of buffer during a market crash where certain areas of the market are impacted much more heavily than others. And it can also limit the amount of damage that your portfolio takes from a rogue stock that is either crashing or performing very poorly. For example, NIO is a stock I own. It's a spec play. It's not really an investment for me, but it is a spec play, but it's a stock that I own. And it's a stock that has been crashing, yet it's only brought down my overall portfolio by around 1% because I own so many other stocks and good foundational stocks like Microsoft, Disney, Amazon, maybe you could argue AT&T and Alibaba, but certainly JP Morgan Chase. And those foundational stocks are kind of like the glue that holds my portfolio together. And because the majority of my money is in those stocks, rogue kind of smaller or maybe more speculative stocks have a less negative impact on my portfolio when they perform very poorly. So I'm a big believer in diversifying. However, I'm not so much a believer in diversifying just for the sake of diversity. And what I mean by that is that I don't think anybody should just throw money into an energy stock or a biopharmaceutical or some random consumer staple or some bank just to say that they own those different sectors. If those are markets or companies or products that you don't fully understand yourself, you should not be investing in them. That's my belief. And so for me, I'm very passionate about technologies. Not only are we more technologically advanced today than any other point in history, but I think that that will continue to be the case well into the future. And so I always spend a lot of time researching new technologies and innovations. And in my circle of family and friends, everybody knows me as kind of the tech guy, maybe the tech nerd or whatever you want to call it. But it's because I know a lot about smartphones, television, appliances, gaming consoles, computers. I know a lot about that stuff. So I like to invest in companies that are heavy in those areas because That means that I will understand their products, their prices, their margins, their competitors. If anything changes within the company, I immediately know if it's a good change or a bad change, and I know if I should adjust my position as a long-term investment. Whereas if I didn't fully understand those companies, then if something changes within their company, say a biopharmaceutical stock, say something happens with one of their products and I don't fully understand what's going on, I may end up selling the stock too early or maybe too late. So because technologies is my area of expertise, I like being overweight in that sector. Having said that, just because the majority of companies I own are very tech heavy themselves, doesn't mean that they're not diversified within their businesses either, or that they target many different markets, or that these are companies that offer products and services that the world will always demand. So look at some of my stocks here. Microsoft, Windows operating system, Office for business. LinkedIn is like a Facebook for professionals. GitHub for coders. Xbox for gaming. Azure for cloud computing. They also do artificial intelligence and machine learning, all things that everybody will always demand. Amazon, e-commerce. Twitch for video game streaming. Cloud computing, and they also do groceries with Whole Foods and online pharmaceuticals with PillPack. Disney, world-class resorts and theme parks. They own their own cruise line. They have blockbuster movie studios and brands and IPs like Marvel and Star Wars and Pixar, and the list goes on. They're even doing on-demand video streaming with Hulu, ESPN Plus, and Disney Plus to take on Netflix. AT&T, a telecom company, sort of a utilities play, you can kind of consider it, a big play on internet usage, a big play on 5G, and video streaming because of the acquisition of Time Warner. Alibaba, e-commerce and cloud computing, very similar to Amazon, but also a huge play on the Chinese market overall, so a completely different market. JP Morgan Chase, a banking and finance company, so that's completely different than what I own. And then I also have like Nintendo for gaming, but I have a bunch of semiconductor stocks, and I do have a lot of those, but those are relatively small positions. So in my opinion, they kind of just accumulate to one big play on the semiconductor space, and those are plays on markets like gaming, data center, autonomous driving, artificial intelligence, machine learning, deep learning, and the Internet of Things markets, all markets that I think will be big in the future. And then Tesla, electric vehicles, autonomous driving, and even battery production and power generation. So it's also a little bit of an energy play as well. And then 2U, the smallest stock in my portfolio, but a big play on online education. So yes, a lot of these are very tech heavy, of course, nobody's denying that, but they operate in markets that are very high growth and that I think will be very big in the future. So I'm not going to limit my exposure to them just so I can say that I'm diversified into other sectors. And one last quick thing I'll mention is that a lot of people leave comments saying that I should be diversified in other sectors because of rotational money. But rotational money is something that I could not care less about because I'm not a short-term trader, I'm a long-term investor. And so I'm usually doing the opposite of what the herd is doing. So just because a bunch of hedge funds are selling Microsoft and putting their money into Wells Fargo in a rotational shift from tech over to like finance, that doesn't mean that I'm going to sell my Microsoft stock. In fact, if everyone's moving out of tech, I'm probably moving into tech. And I'm using that as a buying opportunity. Again, we could argue about this stuff all day, but this is just my opinion. I believe in diversifying. I just don't think that it's nearly as important as other people make it seem, as long as you're buying good companies that have good fundamentals at attractive valuations for the long term, that have good future growth prospects. Okay, let's switch gears here and do a rapid fire of as many other comments that I can get to. Okay, Alejandro asks if I think that this is a good time to enter Google. So I've always been very bullish on Google. I don't think there's ever been a bad time to enter Google, and I think that their future looks incredibly bright, so I'm a big fan of Google. I don't own them yet. I used to own them, and I will probably own them again in the near future. Dylan mentions Ripple because my cryptocurrency video, I mentioned that I wanted to buy Ripple and make a video about it, but he says that I probably didn't buy it because it climbed up so fast with the rest of the kind of cryptocurrency space. And you're correct, Dylan, I have not purchased Ripple yet. I still want to, and if I do, I will make a video about it. Okay, and Shinton asks about the prices I paid and when I bought each stock. So I addressed this in the intro of that previous video. I mentioned that this is just too detailed, specific information to be giving out on the internet, and I have a lot of friends and family that watch my videos, And I also have a lot of trolls that watch my videos who I know would love to use my personal information against me. So I'm not comfortable giving that information out yet. Right now, I'm only willing to compromise with the percentages of the stocks in my portfolio, but maybe in the future I will give more specific information. We just have to see how comfortable I feel being on YouTube and putting myself out there, but we'll see in the future. Andrew asks if I would consider Huya as a potential speculative stock. Now, Huya, I believe, is a Chinese kind of Twitch clone stock, and Twitch is for video game streaming, which is owned by Amazon. So yeah, Huya does seem very interesting to me. I don't know much about the company, but I will probably make a video on them in the near future. Okay, Haristo asks, how about some Nokia and Ericsson? If I had to choose one, I'd probably go with Nokia. I made videos on both of these in the past, but both of them are big plays on 5G, and I already own AT&T, and it's like my fourth biggest stock, so I don't feel like I need more exposure to 5G. And I'm already so heavy on tech also, so I just don't feel like I have to own either one of these at the moment. But if I had to choose one, I guess I'd probably go with Nokia. I think they have a little bit of a better dividend. Okay, Maximiano says that he would reduce my exposure to spec stocks, would never have NIO, although you never know, but it isn't looking good at the moment. He would also sell Nintendo, and the rest looks good. Okay, so those are some fair arguments. NIO is extremely speculative, as I have mentioned in the past. Right now, I'm comfortable with the average price that I've paid for it, and I'm comfortable with the position I have in it as a long-term spec play. So I'm not adding to it, I'm not selling it, I'm just kind of comfortable with what I have, and I will adjust to it in the future. Whenever I do, I will make a video on that. But I just kind of like it as a spec play on the Chinese EV market. And then when looking at Nintendo, I also agree that it can be a little speculative. They have innovated a lot with the Nintendo Switch, and so I invested in them for that reason, and I made some really nice profits with them. But lately, I feel like they should have been putting more effort into their online infrastructure, and they should have been offering more features for their subscription service model where they bring in recurring revenue. So I'm kind of disappointed in management right now, but there are talks about them partnering with Microsoft to expand on their online infrastructure. And there's also rumors about a new Nintendo Switch Pro and Switch Mini, which are their gaming consoles. And so if those end up being true, that could potentially give them some more growth in the near future, but we'll have to see. I'm not really comfortable adding to my Nintendo position, but they have some really strong brands and IPs like Pokemon, for example, and the last Pokemon movie was a huge success. So they definitely have some firepower. I just think that they need to use them more effectively. So I'm just kind of holding, and we'll see what happens in the long term. Okay, Bobo asked for my opinion on SoftBank. That's a stock that a lot of people have asked me to cover. Unfortunately, I haven't researched them enough to give my opinion on yet, but I will hopefully do a video on them sometime soon. Okay, Mystic basically says that Nintendo is too risky, Take-Two and Activision Blizzard would be better choices, and that Nvidia and AMD are more speculative than Tesla. Okay, so I kind of agree with some of that. Nintendo is pretty risky at the moment, in my opinion. But Take-Two and Activision Blizzard have also gone through some struggles. Take-Two, I would rather wait until they release their next Grand Theft Auto game. I know that's kind of a controversial game, but if I was going to make a play on Take-Two, I would probably wait for that next Grand Theft Auto game and try to ride that wave. When looking at Activision Blizzard, I'll talk about them a little bit later in this video because someone else asks a question about them. And then Nvidia and AMD being more speculative than Tesla. The only issue with that is that Tesla has struggled to be sustainably profitable. Nvidia and AMD have had their issues recently because of the cryptocurrency crash and the hangover associated with it. But last year AMD was profitable, and they're still stealing market share from Intel and Nvidia. So I still kind of like AMD. I just think that their valuation is very rich right now. And it's one of the reasons why I cashed in some very nice profits from AMD, which I actually received a lot of criticisms for because I'm a long-term investor and I have a lot of long-term investing viewers who don't like it when I cash in profits. But that's one thing that I don't really like about long-term investors is that a lot of times they're very hesitant to cash in any kind of profits. And I think that sometimes when a stock just takes off and the valuation becomes very rich, I don't think there's anything wrong with trimming your position a little bit, taking some of your insane profits off the table, and then maybe putting that money into another stock that is incredibly undervalued at the time in terms of the valuation. So for that reason, I cashed in some huge profits with AMD, but because they still have some future growth prospects in the pipeline, I want to stay invested in AMD at least a little bit for the long term, so that's why I'm still holding it. And then Nvidia has been profitable for many years, going back into last year, and they're struggling right now because of cryptocurrency, but I do think that they will return to growth at the end of this year. That's just my opinion. But I'm also invested in Tesla, so I really like Tesla as well, so I don't really see any problem with any of those comments. Okay, Patrick says CVS is a steal right now, and what is my opinion? So I have talked about CVS in the past, and I mentioned that this is a stock that I like, good dividend, good valuation, and they acquired Aetna, and they're adding CBD products to their stores. So those are some possible growth drivers for them in the future. I just feel like I need to research them a little bit more before I invest in them, but it is a stock that I do like, and that would also offer some diversity in my portfolio that is very tech heavy. Okay, Mad Hype asks if I can make a video about my early stock market mistakes and how to avoid them. So absolutely, I will make a video on this in the future, but just to give you a quick little taste, some of my earliest mistakes as a long-term investor was listening to short-term noise and drama. In the past decade, you guys know this, we've been having predictions about a recession every single year, and every time that we have a correction, everyone says that it's going to turn into the worst market crash in history, and a lot of times long-term investors sell out of their positions, or they're hesitant to take advantage of any kind of market dips because they think it's going to go lower and lower, and they try to become short-term traders and attempt to time the market. So some of my earliest mistakes was thinking that I could time the market. And believe me, I know that a lot of my viewers are short-term traders, and they leave me comments all the time saying that they can absolutely time the market, and they say that they make a lot of money. I've never met anyone who has done that successfully. Every short-term trader I've met has lost a ton of money, but I'll take your word for it. You guys tell me that you're making a lot of money, that's fine. I'll take your word for it. But long-term investors focus on very different aspects than what short-term traders focus on. Long-term investors focus on a company's fundamentals, the stock's valuation, maybe dividends, but also future growth prospects for the long term. Short-term traders focus much more heavily on technical analysis, which is a tool that long-term investors can use, but short-term traders focus almost exclusively on technical analysis, and they don't care about a company's fundamentals or the valuation of the stock or their future growth prospects, and they focus on the short-term noise and drama and the market sentiment and what's driving the market up or down, and they try to profit off of that. So as a long-term investor, you have to tune a lot of that noise and drama out, and you have to realize that anytime you have a market dip, correction, or crash, those are usually buying opportunities to build good long-term positions in good companies at good valuations for the long term. And that's the mistake that I've made, is listening to the short-term noise too often. Okay, moving on here, Thomas asks, what size cash position do I have or generally keep? So generally I keep it at around 15% or less, but because we haven't had a crash in a very long time, I do have it a little bit higher right now at about 25%, just to make sure that I take advantage of the next big crash. But just so you know, I do actually tap into my cash position whenever there is a market correction also. So like at the end of last year, we had that big correction and everybody thought it was going to turn into the worst crash in history. I was tapping into my cash position and I was adding to stocks heavily with that money, because I acknowledge the fact that I can't time the market, and sometimes corrections are just corrections, and the market rises up again and you end up making huge profits. So I use that cash position for both corrections and crashes, but right now it is a little bit higher than normal. Okay, Ju Chang asks, how do I stay so patient holding stocks for so many years? So that kind of goes back to what I was saying about long-term investing. It has to do with ignoring the short-term noise. I don't lose sleep at night thinking, oh, are the tariffs going to go to this percent or go to this country, or is President Trump going to make this tweet, or any other kind of short-term noise and drama. I don't pay attention to that. And it's a little difficult now with a YouTube channel because everybody keeps leaving me comments saying, oh, the market's about to crash. Oh, this is a recession. Oh, you're an idiot if you're buying stocks right now. So it's a little more difficult to have a long-term horizon with everyone constantly bombarding you with like short-term noise and drama. But I think that is the key to holding long-term positions, is ignoring the short-term noise and drama and just making sure that you actually take advantage of what the market gives you. Whenever there's a correction or a crash, you actually take advantage of it. That's key to it also. Okay, Fab asks, no Apple or 3M? No, at least not yet. if I had to choose, I'd probably go with Apple, but I do kind of like 3M too. But 3M is just kind of struggling with growth at the moment, so I'm not really interested in either company at this time. But if I had to choose, I would choose Apple. Okay, moving on here. Aisha asks, are you planning to buy Google or Facebook on the dip? I love both companies. If I had to choose one, I'd probably go with Google, and I may buy them soon, but I'm still not 100% decided. Okay, moving on. PSP asked, did you buy more Alibaba after the tariffs in May? And yes, I did add to my position in Alibaba. Okay, Financial Freedom asks, why are you not trimming or rebalancing Microsoft to meet your desired allocations? Okay, great question. Microsoft is a stock that is trading at some of its highest levels right now, so I'm not looking to add to my position, but it's still a company that I believe in heavily for the long term, and I want to own this stock for the next 5 to 10 years or possibly decades into the future. And it's also a really good dividend growth stock that I think will be more valuable in the future. So I don't want to sell out of my position. I'd rather rebalance my portfolio by adding to some of my other stocks. Okay, moving on here. D-Bag says, very boring portfolio. Every kid would make the same picks right away. Okay, Trin asks, don't you own Activision Blizzard? So yes, I used to own Activision, but I ended up selling for a 10% loss. And by the way, Activision is a gaming company, but the reason I sold is because I didn't like the decisions that management was making or the way that they were treating their fan base. So because of that, I wanted to take that money and put it into other stocks. But I still think that Activision Blizzard has a lot of long-term potential. I still believe in them. I just rather be invested in some other stocks. And like I said before, I'm already very tech heavy, and I'm also very heavy on gaming. So I don't feel like I really need Activision Blizzard as much as I thought I did. And at that time, it was only about 5% of my portfolio, so it wasn't a big hit to sell out of it. So that's why I just ended up selling and putting the money into different stocks that I believed in more. Okay, Abhishek asks, why no ETFs? So the reason is because I love handpicking stocks. It's a huge passion of mine. Obviously, I have my own stock market channel. So because of that, I love to handpick stocks, but I do acknowledge that ETFs are great, especially for beginners or people who do not want to actively manage their portfolios. Just put some money into an ETF and let it ride well into the long term and into the future. But for me personally, I just think it's a lot more exciting and a lot more fun to handpick my stocks individually. Okay, Irving asks, do I swing trade? So sometimes I swing trade, but it's pretty rare. And the only times that I ever do it is if one of my long-term positions is extremely volatile, then maybe I will kind of trim a little bit when it goes up a lot and then add a little bit when it goes down a lot and then just kind of keep building a long-term position. But again, it's pretty rare that I do that. I only do that with certain stocks. But anyway, I think that just about does it for today's video. I hope you guys enjoyed it. Hit the like button if you did, and leave your thoughts and comments down below. I'd love to read them and respond to them as well. So I will catch you guys in the next video. Take care. Bye-bye.